Alex Marchesini here, CEO of Planet Smart City Digital and co-founder and board member of Toknar. We at Toknar, we provide liquidity for small and medium enterprise thanks to our non-bank liquidity provider. And what we normally do, we put our platform embedded in a white label fashion on the systems of creditworthy corporate debts. So we like to call ourselves players in the embedded supply chain finance space. And we do that through tokenization, the use of AI and other automation tools. So AI not only can help you to establish the risk of a trade receivable or a tradable digital asset on the onset when you finalize the purchase agreement, but you can also have is a continuous monitoring during the life cycle of the purchase agreement of what happens to any asset linked to that receivable, like the delivery of goods. For example, if there's publicly available information that make that purchase agreement riskier than when was originally signed. That's useful, for example, for liquidity providers to renegotiate the provisions of the agreement, or also when if they want to sell it on the secondary market to another liquidity provider with a different risk profile. Finally, one last thing, Andrea, when you talk about tokenization, is a lot of people see it merely from a speed, efficiency perspective. Obviously, we have transparency, and they often think about fractionizing whatever asset they tokenize to make it accessible to retail. I want to say we shouldn't overlook the opportunity to aggregate. So when you tokenize an asset, that can be aggregated, mixed and matched in a way that can be packaged into security. So we shouldn't forget about the opportunity of securitized product for what can be an institutional investor, because they will have their own clients at their end. They may want a type of product that has components of different profiles, and they can do so by merging the original tokenized assets into a different token, which is, again, the RWA-backed security product.